I know we got people, a couple of people still missing, but we're just gonna go ahead and roll due to sake of time. All right, so let's get back on this regular divergence, okay? So yeah, regular divergence is used, when, let's say for example on the uptrend, we're really using regular divergence to see, if we have a reversal, and hidden divergence pretty much to see if we have continuation in price. So you got just bear in mind about that, and just understand like the difference between regular and hidden divergence, because that will be on the exam this Friday. So you guys keep fresh memory on the difference, and you guys should be fine. And also a couple little details here and there, but you guys should be fine. All right, guys. I hope you guys are ready, because we're about to talk about some Fibonacci retracement. Okay. Now, I hope I'm not scaring you guys too much, but this is a little bit of a complicated a subject to touch on, and it does take a bit of time to understand it. Just depends on how hard you question me, one, and then two, how hard you actually study this stuff. So what is Fibonacci retracement, or Fibonacci retracement levels, right? So Fibonacci retracement levels are a series of numbers based on ratios in a recursive mathematical equation used to create key levels in the market. Okay, so also know that Fibonacci retracement is mainly used to enter trades, but bear in mind that it can also be used to predict take profits as well, meaning that it can also be used to let you know when to get out of a trade. And I'll talk about that later on and show you guys an example. But do keep in mind that it serves both purposes. One, in helping you to enter a trade, but also letting you know when it's time to get out of a trade. Okay. Now you always want to use you always want to use the Fibonacci retracement in trendy markets. Okay, you don't want to use it in consolidation, because price really isn't going anywhere. You want to see a steady uptrend or a downtrend, and look to apply the Fibonacci retracement tool from there. Okay, so just bear that in mind when you guys are trading the markets. Okay. All right. And so this is pretty much, how you trade Fibonacci retracement. Okay. So, all right, guys, pay close attention. So what you want to do is you first want to identify your swing high or swing low. Okay. And so you may ask me, what is a swing high or what is a swing low? Okay. So a swing high, swing low is a move in the market, whether up or down, that has little to almost no retracement. Okay. It has little to almost no retracement. So if we're talking about a swing low is seen in a downtrend, and it's usually when price is dropping. Swing high is seen in the uptrend, and it's usually used when price is rising. Over time, seeing a swing will become second nature. Okay, so keep in mind, how this stuff works. All right, so so here's a swing that we have right here. As you guys can see, price is dropping, and these green candles pretty much mean that price went up. But look how little you see these green candles, and look how drastically the market dropped. And so you've identified pretty much a swing low, and it's a swing low because it's going downwards. If this swing was going upwards, it'd be considered a swing high, right? And so you first identify your swing low or your swing high, and you can look at it based on seeing little to no retracement. So here you see a little bit of retracement with these two green candles, but that's really it. That's really it. You just see a big drop in price, okay? But that's not it. Okay, we're not done, because there's a couple other processes, a couple other steps that you want to look into when it comes to trading the Fibonacci retracements in the market, okay? All right. Second step, after you identified your swing, in this case a swing low, you then want to look ahead of that swing and identify a retracement. Okay, so we have our swing low, and we've identified the swing because we have little to no retracement. And now ahead of the swing, we see a big retracement. So as you can see, there's a reversal. After the swing has completed the swing low, you know, the market started to reverse, and now we've identified a retracement. We have a potential candidate for retracement. Okay, it's not an official retracement yet until we pull out the Fibonacci retracement tool to see if it hits one of our levels. Okay, all right, so at the very top, okay, at the very top right, you guys see that there's a retracement. And so you have to first pull out your Fibonacci tool to confirm that retracement, right? And so we pull out the Fibonacci retracement tool, and we have key levels that we always want to pay attention to when it comes to Fibonacci retracement. Okay, now the biggest level that we want to talk about is the 0.618 level. As you guys can see here, we have the 0.618 level, and I mean very big level, as you guys can see. And price always gets rejected off of this level. I mean, you ask any trader about what the 0.618 level is about, and depending on whether or not you have a uptrend, a swing low or swing high, they'll tell you, okay, well, price is usually rejecting off this level. So this is a very important level. So we have a swing low, and then price retraces all the way up to the 0.618 level, how we like it, and that's perfect entry for a sell. And usually your stop loss would be like up here, right up here. All right, so you know, that's how you want to trade using the Fibonacci retracement tool. Now I'll talk about the 0.5 level, 0.32 level as well. And you know, the lower down you go, based on the way I trade, the more irrelevant these levels are. But when we talk about harmonic patterns later on, you know, I'll talk to you guys about how important you know, it is to use these levels. But for now, when we're just looking at pure you know, Fibonacci retracement, and also when we're trading the ABCD pattern or the AB equals CD pattern, you know, the Fibonacci retracement tool is key. Okay, so now after you identify your swing and retracement, you then want to confirm your retracement, right? So we had a retracement, but we had to pull out the Fibonacci retracement tool to confirm whether or not it was a valid retracement. And so in the image, our retracement is now confirmed, being that it has reached our golden level of 0.618. And we can now confidently enter in for a sell. Okay. And so here you have an identified swing. And now we have a confirmed retracement because it's hit this level, right? All right. Now, after you've identified your swing and confirming retracement, we can now enter a trade. And since we have a swing low and price has retraced up to the 0.618 level, we're looking to do a sell entry, right? So in the image, our retracement is now confirmed, being that it has reached our golden level of 0.618, and we can now confidently enter in for a sell off the swing low example. Okay, so now we can confidently enter in for a sell. And then look at this price action, guys. This is what I'm talking about. So you guys can also see that there's an evening star right at the 0.618 level. So price rejected the 0.618 level here up top with an evening star. Okay, now it's kind of, I don't know. Matter of fact, this evening star is kind of iffy because I would like this green candle to be a lot bigger, but it seems to be around 50% of the red candle, which is what we kind of want. But yeah, so this is kind of how, as you can see, most of what I'm teaching you guys are starting to come together, you know. So you have a retracement at the 0.618 level, which is a very, very crucial level. And on top of that, you have an evening bearish price action formation as well, which gives you more confirmation to sell. And bam. You sell it and just keep letting it drop until you're able to use the fib retracement or fib extension tool to see where you should take profit. And I'll talk about the fib extension tool as well. But yeah, this is pretty much like the basics of how you want to look at trading. You know, how you want to look at trading the market when it comes to retracements. Okay. Okay, so trading Fibonacci retracements in the market. Note, you want to pay attention to the golden ratio at the level 0.618. Also know that price doesn't just go straight up or down. There will always be retraces. And, you know, that's why we have the Fibonacci retracement, because certain retracements give you certain reactions. And so the closer price retraces back to the 0.618 level, the better. So I say that because sometimes, you know, the price won't exactly come all the way up to the 0.618 level. You know, it might stop just a little bit short. But with that being said, you know, I still see it as a valid pattern. And the probability, you know, the chance of it dropping is also good. Now, if it drops even, you know, a little bit way below the 0.618 level, then that's when you want to start thinking, okay, well, maybe this isn't a good time to enter, and this won't be a good, you know, retracement. Okay, because looking back in the image, let's go back. Actually, before I go back, does anybody have any questions at the moment? Anybody confused on any concepts that I just talked about? Okay. How about you, Daphne? All right, awesome, awesome. So you guys are really getting a good grasp of really what's going on. 1 second. Okay, so you guys got a good understanding of really what's going on. So that's very good. Okay, that's very, very good. So yeah. So now we have a confirmation that our retracement is good. And another thing I wanted to talk to you guys about was about how price can stop short. So here, you know, and also I want to talk to you guys where your stop losses would be at. So here, price retrace all the way up to the 0.618 level, right? And ideally, you want your stop loss to be right here, okay? Right here. And so if you get hit, you know what I'm saying, if your stop loss gets hit, then you're just going to take that loss and just, you know, reevaluate what you did wrong, right? Also, bear in mind that the lower that price goes below the 0.618 level, the bigger your stop loss has to be, right? So that's why this 0.618 level, you know, this is a good level to take your entry off, because this is, you're usually looking at a 50 pip or 40 or 50 pip stop loss. Now, the closer it is, you know, below, you know, the more away it is from the 0.618 level, then, you know, the worse it is, because now your stop loss becomes a lot bigger, which means, you know, you can lose a lot more. And I'll talk about stop losses later on, but just think about stop loss as a way of you making sure that you only lose a certain amount within the market. That if you go to sleep for whatever reason, you know, the market doesn't go in your favor, that there's only a calculated amount that you can lose, being that the market doesn't go in your favor. But we'll talk about that later on. All right, so here's an example. Just want you guys to see this visually without any candles. Here's an example of Fibonacci retracement in the market. And here you see, guys, a downtrend. So you have an identified swing low. As you can see here, this is our swing low. and then price comes up, and then price then drops because it comes up to 0.618 level area and then drops, right? And here's an uptrend. So this is identified swing high, and bam, you have your swing high because price comes up with little to no retracements, and then it drops back to this golden level right here, 0.618 level, and then it goes straight up. Okay. Now let's talk about you know, how price can stop short of the 0.618 level, but that doesn't necessarily mean that all is, you know, lost, right? So so although an example, the retracement stopped at the 0.5 level, 0.50 level instead, we can still enter for a sell. I'm sorry, this is supposed to mean sell. And this puts stress on our stop loss, as I just mentioned before. So remember, the closer that price retraces from the 0.618 level, you know, the better, because we won't be risking that much or have that much on the line, okay? And so here's an uptrend. We have our swing high. And so the same thing, you know, although an example, the retracement stopped at the 0.5 level, 0.50 level instead, we can still enter for a buy. But, you know, you got to keep in mind that this puts stress on our stop loss. And, you know, as I mentioned earlier, I know I was supposed to talk about it later on, but I just mentioned it right earlier. So remember that, you know, the price closer to that retracement, you know, the closer the price retraces from the 0.618 level, you know, the better. All right. So now, one thing I know you guys may be asking is, you know, how do you draw out the Fibonacci retracement Fibonacci retracement tool? And I'll show you guys how to do that right now, actually. So let me pull up the chart. All right, guys, pay close attention because this is step-by-step on how to do the Fib retracement. Pretty good stuff here. All right, so let's zoom in a little bit. All right, so here we see that price, you know, has risen here, and here you could have called this your swing. You could have called this a swing high, right? But the reason I didn't trade this or make any profit off this swing high is because you remember that after your first swing, you can look after that swing to see if you have a retracement up to the 0.618 level. Well, you have your swing high, but look at this. When you bring out your Fibonacci tool, your Fibonacci retracement tool, price goes up. But look, here's our golden ratio. This is the golden area, and price just drops all the way after that. So this is not valid. Okay, we were looking for some type of retracement here, but we didn't, and we would have gotten a retracement even. Sorry about that. We would have get a retracement even here. You know, that would have been good, but no, price just went straight through that, and you know that's why I didn't. Look at this. Price just went straight all the way down here, and so now the swing high is invalid. I'm not looking at that swing high anymore, right? So let's move on to the next swing. So we have the swing low, and right after, and guys, this will be like second nature. I'm saying this because I'm telling you guys step by step. But after a while, you guys will be able to open up a chart and wham, see it almost instantly. But because you know your eyes are starting to develop in terms of how you see these patterns, it may take a while or may take some time, but you guys will get there. So here we have the swing low, right? After the swing low, you know, we see a retracement. Okay, cool. That's a pretty nice looking retracement. Let's bring out the Fib retracement tool and see if that's a valid retracement in our trading book. Actually, all right, so that's pretty close. You see that wick there? That's pretty much what we want. We want a wick with the evening star formation. That's even beautiful. Now I would like this red candle be, this green candle be a little bigger, but that's fine. So this is perfect. You know what I'm saying? We got price action, evening star right here, and on top of that is at the golden ratio. We have bearish price action at the golden error ratio with the 0.618. So, you know, I'm expecting for price to drop after this. So I'll put my sell in, and wow, look at how far it drops. So that's beautiful. That's beautiful technique. That's a beautiful pattern. Usually isn't that this pretty. Sometimes you won't even get that price action. You won't get an even star or nothing like that. But here, you know, it just played out beautiful on Palladium. Okay, so now let's talk about how to draw out this pattern. We've already talked about the retracement and all. Let's talk about how to draw out the retracement tool, right? So now how we draw it out is really just so you first want to identify your swing high, your swing low, right? So we found our swing low here, right? Whenever we have a swing low, we want to draw that Fibonacci retracement tool from the very top left of that swing low to the very bottom right of that swing low, and that's how you will see your price levels. Okay, so you know, just keep that in mind, guys, when you guys are you know, trading the market, and when you guys you know, are looking at these Fibonacci retracement levels. You guys really got to make sure that you draw it right, and the more precise it is, the better, you know? Okay, so, you know, just keep that in mind. But yeah, so that's pretty much how you want to draw it. Now, let's say that you have a swing high instead of a swing low. So let's say that for some reason, this swing high was a valid swing, right? And so you have a swing all the way here, and we wanted to bring out the Fib retracement tool. Well, since it's a swing high, we basically, all we have to do really is just grab the Fib retracement tool and go from the bottom left of that swing to the top right of that swing, right? And that will bring out your Fib levels. And then you just identify the 0.618 retracement level and hope that price retraces off. Hold on one second. And just hope that price retraces off around there. So actually, this isn't a bad. Actually, this isn't too bad right here. This actually is a valid swing, to be honest with you. It's a valid swing. The only thing is it passed up the 0.618 level. But here's the trick, guys. Nothing's really wrong with passing up the 0.618 level. Like, you can even have body, like candlestick form within this price range. All right, so this is very important as well. So guys, try to keep a close eye on this. And we're kind of running low on time, so this will be the last concept, but this is actually very important. Okay, so just bear in mind that even though price passes up the 0.618 level, that's okay. I mean, that's fine. Okay, so candlesticks can form between here. Candlesticks can even form between the 0.5 and the 0.618 level. So let me draw this, make this even bigger. So this whole zone isn't a bad retracement zone here. Let me delete this. Okay, this whole zone right here is not a bad Fibonacci retracement zone, okay? Now, the only problem we can have is when price enters into this zone. Once it passes the 0.786 level, that's when we don't want that, okay? Now, when I say that, I mean when the actual candlestick body forms past this, okay? So having a wick past the 0.786 level, that's fine. That's perfectly fine. We can have a wick past that. But if we had a candle develop past the 0.786 level, then that's invalid. We don't want that trade, okay? So this whole range, whether we have a swing high or swing low, is valid. It's a valid, I mean, price stops anywhere in between here, we're good. You know what I'm saying? The only thing we don't want is a candlestick, you know, the body of a candlestick to form past this 0.786 level, and that, because that will, you know, invalidate invalidate this trade. And you know, that's just how I trade. So, you know, just this red area is that, you know, kill zone. That's where you guys want to look for your entries and stuff, and look to take your positions. Okay, so that's very important as well. Keep that in mind. But yeah, so that's pretty much how you would draw it. Let's say if you had a swing low, you would just find, and if you had a wick, you want to put it at the very end of that wick. Now, let's say we had a market maker wick, right? And so that wick was like super big. We don't want to really judge it off that, because, you know what I'm saying, that's like a spike out. If the wick is around 50 pips, that's considered a spike out to me. That's like a market maker. That's like your broker, you know, trading against you, trying to get your stop losses, or like institutional, you know, stop hunt. You know, so you got to watch out for that. Try to put it around midway. If that wick is around 50 pips, you want to put it like halfway within that wick and just base it off there. But yeah, so just remember with the swing high, you want to start from the bottom left and go all the way up to the top right. That's how you want to do it, right? And if you have a swing low, so here's a swing low. This is a valid swing low. You want to go from the top left to the bottom right. And just keep that in mind, guys. So there's a live example of actually how to trade it out. Now, does anybody have any questions so far? Okay, so we have a question from Daphne. She's asking, is it better to draw line charts when drawing Fibonacci, when drawing fibs? Yeah, I see what you're saying. Okay, so yeah, that's even better. So let's say you had a market maker stop hunt, right? And right, so let's say I see exactly what she's saying. Okay, cool. So one thing you can do when you're looking at fibs, and that's a really great question, great point, Daphne. Whenever you're trying to find like precision, you can just go to a line chart. And so these charts allow you to look at candlesticks, or you can just look at the nakedness of these candlesticks in terms of lines. And they are even more accurate. And so let's say I had the swing low that I was just talking about. Here's the swing low, right? That's the swing low, right? And then I bring out the fib tool. I go from the top left. You see how precise that is right there? And even we had a market maker spike, you know, we can, I mean, this line tool will tell you where exactly the real price is at, and you can be able to judge it off that too. So bam, you'll let that go right there. You'll let that go right there, and you'll be good to go. And so now you have your perfect setup. Then you'll go back up here, bring back out the candles, and perfection. You see what I'm saying? So, you know, that's a really great point that she brought up. And, you know, that's really how you want to trade these markets, guys. There's different ways you can look at different setups and go from there. So great question, Daphne. We're going to wrap up the session for now. If you guys have any questions, just hit me up in the group chat. But do remember, we do have a quiz on Friday. So pretty excited about that. Hope you guys are ready to ace that test. I don't know. It's like, I want to say, it's like a 12-question quiz. I know I said exam earlier, but I guess you can call it a quiz because it's not really that many questions. But yeah, just keep a lookout for it and study. And I'm looking to give a little something to the person who actually has the highest score. So see you guys next session. Hope you guys are having a great time. And happy trading, happy pip, guys. Uh, 1 second. Okay, cool. All right, no worries, man. Thank you guys. You know, I'll put up some more content. I still got some good stuff for you guys. So just keep, keep it up, keep practicing. We're gonna really get trading. So I know you guys really want to get started on trading, but I feel like this is very important first, and also patience is even more important, especially when you trade these markets. So talk to you guys on Friday at 5:30 p.m. Central Standard Time. And until then, you guys have a good one. Bye bye.